Hello and welcome to the Fibonacci free video for Friday, November 17th. This is David, and let's follow up on our Monday discussion about Apple, right? So on Monday we were talking about this little pullback here and whether it was the sign of something bigger. And we were basing our discussion on the Voodoo lines, and I think one of the best ways to understand the things that we're talking about is not just to talk about them when they're happening, but then to come in and follow up on what we were saying and see how it can be useful in trading the markets. So in here, we talked about the importance of the fire line and the fact that the reaction that we had negatively on Monday right here from the Voodoo skyline is exactly where we'd expect to see a pullback, and that it really shouldn't be viewed as anything bigger unless or until it started to break this Voodoo fire line. Now, we also talked about some symmetry levels that could break or would need to break in order to think that the uptrend was in trouble and those sorts of things. But let's just focus on the Voodoo lines aspect, because we said at the same time what we would expect to see in order to indicate that Apple was continuing upwards, which it really did the very next day, right? Now, part of that was was the CPI print that got markets excited, but we said getting above and especially testing and holding this next skyline up, or the skyline that we had reacted to here at 186.79 would keep the focus upwards, right? Next stop towards 190.57, and you can see that's exactly what we did. We came in, we gapped to above that 186.79. We came down, tested it and held, continued up through the day, and then had additional gaps up into that 190.57 skyline. So from here, again, a spot where it would not be unusual to get a reaction, getting support above 190.57 would just keep focusing on the idea that that the roadmap had the potential for more upside. Now, if it doesn't continue directly up, any sort of consolidation between 190.57 and 186.79 does really no damage at all to the bullish view. It would have to break 186.79 to even think that we had a bigger pause, right? But as these are really small degree levels, again, that just sets up a potentially consequential retest of 180.66 that we don't even have to consider if 186.79 doesn't break. So again, in between here, no worry at all. Above 190.57, and the path continues still upwards, and a break of 186.79, and you hold off until you see whether it's going to break 180.66 or regain 186.79. So hopefully you found that useful, not only talking through what could go on from here, but see how these observations play out and how the Voodoo lines can give us useful levels to monitor the progression of the trend. That's what I have for this evening, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.